In this video, we're going to look at the Very Good Food Company, and I'm going to explain why I think it has the potential to explode in value over the next 12 to 18 months. I really feel that we're at kind of an inflection point for this company, and I'm going to be outlining some of my thoughts in a lot of detail on why that's the case. And I really think that this plant-based meat company is being overlooked by the market right now. So in this video, we will cover, for the Very Good Food Company, stock ticker VRYYF or VERY.vn if you're on a Canadian exchange. We're going to discuss the upcoming earnings this Wednesday, August 18th. Then look at the stock chart briefly and some of the history that's gone on with it. Then we're going to walk through the recent investor presentation together. They just came out with a presentation in the last few weeks. And so we're going to take some time and really dive into that, walk through some of the details of that together. And stick around to the end to see exactly what I am doing with the Very Good Food stock right now in my portfolio. So without further ado, we'll jump into it. And if you're new here, welcome to the channel, The Paper Bag Investor, the only investor on YouTube with a paper bag on his head. And with the paper bag and with this channel, what we're really trying to do is we're trying to find high conviction companies that you can put really look at from a lot of different angles, really try and find the essence of the truth of, is this a really phenomenal investment or not? And if it is a really great investment, find those opportunities, then invest with conviction behind those opportunities. That's kind of my investing philosophy in a nutshell. Do deep dive research, look for many angles, really try and find the truth. And when you do, and you find great opportunities, then go big on those opportunities. So that's kind of my philosophy in a nutshell. If that interests you, then you're going to like my channel, I think, and get a lot of value out of my videos. So if that's the case, make sure you hit that subscribe button and smash the thumbs up while you're at it. So this Wednesday, Very Good Food, Very Good Butchers come out with their Q2 results for this year. It's going to be important earnings because we're going to see kind of how Q2 went, but also they're at this inflection point where they're really ramping up production, and we'll really see some clear guidance on Q3, Q4 of this year, and then how 2022 could look. So some more crystal clear guidance from the executive team there. So it's going to be really important earnings. I should also mention I just did a video on Very Good Foods not too long ago, so I'll put that link up there on the screen, so make sure you check out that one as well if you want a shorter version of why I think this stock could 4x the next 12 to 18 months. But in this case, we're going to kind of a deeper dive look through their investor shareholders presentation that they just came out with. So let's jump over and look at the chart now for this company. It's about $252 million US dollars, so it's sometimes listed in Canadian dollars, sometimes listed in US dollars. For the stock, VRYYF is listed in US dollars. So you kind of have to remember that distinction is important. So $250 or so million market cap right now. We're going to look at the chart here over the last year, looking at daily candle chart. So it's really got a lot of hype back last year, really shot up. I originally bought the stock, I think at about like $1.70. It was right in here. Kind of got fortunate right before some major YouTubers started sort of pumping it up, and it got a ton of momentum, way too much excitement, shot up into the $7 range, and then has slowly trended down, as a lot of growth stocks have, but this stock especially has just trended down with the market over time. It is interesting though, right now it's kind of flattened out in the last couple weeks or so here, and I think it's right about, if you look back in history to about last November, December, it's right around the very bottom of this support here. So it's sort of hovering around there. I'm not a technical chart reader myself, but I'm really not sure that I would guess it's going to not go any lower than this. This is my thought, that this is kind of the perfect buying opportunity and the inflection point where they're actually going to start to take off. Their production's actually going to start to happen, and the stock's going to rise. This kind of rise here was just really wild, speculative rise and hype around the stock. Now I think we're at this inflection point. We're actually going to see it take off. So that's really important distinction. Okay, so we're going to hop into the investor presentation here that just came out this month. So it's nice and fresh and really well put together. So we're not going to touch on every little detail, but a number of details. So these are the two co-founders of the company. This guy, what's his name? Mitchell Scott. He's the CEO and kind of lead director of the company. This guy, I'm forgetting his name right now, but he's more in charge of the recipes and product creation of the company. So it's cool to see. I like companies. It's a big, it's a good positive sign if there's founders or co-founders still involved with the company, because if you're a founder, you're a co-founder of a company, there's a certain chip on their shoulder, there's a certain calling, there's a certain passion or feeling that like this is your baby and its success is kind of like your mark or your stake in life, is seeing the success, and even beyond financial success for yourself, beyond that, just seeing what you created and dreamed about actually coming to fruition. So seeing these guys still be involved is exciting and a positive for me. And they talk about their mission here. Basically, they want people to rethink their food choices and offer plant-based food options so delicious that people want to switch to a diet to make that more of a normal diet. A lot of their marketing is really targeted to, I would say, it's definitely kind of hip, younger people, and they're trying to target people that could afford to pay more money for. You might pay actually more money sort of on a per pound basis for a plant-based meat than just buying actual meat. So for that kind of market, you need to have the people that actually care about that, maybe for environmental reasons, maybe for animal rights reasons, and maybe for health reasons. They believe it's better for your body nutritionally. So they're really trying to target that niche or segment of people, which makes sense. Okay, so 2021 operational highlights. Get into some of the numbers here. They have 4 facilities. This is interesting. They did 47,000 e-commerce orders so far in 2021. So in 7 or 8 months, or so by 77 of the 12 months, a little over half of the year. So there, you think if that's accelerating, they could easily do like 100,000 orders this year, and that in 2020 compared to 2020 they did 40,000. So 100,000 maybe for the year to 40,000. Big jump in e-commerce orders, which I think is exciting, especially niche products like this, and in the 21st century, having that logistics set up to actually do e-commerce orders and get it shipped directly to your home is a cool option. So why not have that option, especially for more niche products like this? 2,100 active monthly e-commerce subscribers. That's great. They're in different provinces, territories in Canada, and 50 states. So they're pretty much through the US and Canada. You can buy their product one way or another, but they're going to make that easier and easier now, because this company's really been heavily production constrained so far in their life cycle as a company, and they're at this inflection point where they should have tons of production suddenly coming out in Q3, Q4 next year, and then beyond. So increased production. They went from 80,100 pounds per week of production, so product production, about 8,100 pounds, to 89,000 pounds per week. I'm going to open up my calculator here and just type in 89,000 times by 52 weeks of the year. So we're at about 4.6 million pounds of capacity per week right now. 4.6 million. We'll keep that number in the back of our minds, and that number is only going to continue to increase in the next few years. So here's some of their executive staff. I talked about these two guys, and then some of the other executive leaders of the company. Their value proposition. They're talking about how they're going to expand, what makes their products kind of unique. But one thing that really does make their products unique versus maybe say a company like Beyond Meat, for example. Beyond Meat is interesting in a way. They're really trying to convince the consumer that their product is literally better than meat. It actually is, meat 2.0. It tastes better than meat, and the science behind that and the technology behind that is really what they're trying to promote. And I think for some people, If you're looking at Beyond Meat and you're considering trying to eat Beyond Meat, one concern is for some people might have is say, well, like really, what's in this product? Is this product really actually good for me, or is it, or is it not so good for me? How do I really know? What Very Good Foods is doing is they're really pushing that their product is kind of this gourmet. In terms of just more traditional, vegan meats that are made from beans and just natural ingredients, they're sort of as good as you can get, and they're not made in a petri dish. They're made with things you'd just go buy at the grocery store, like carrots and onions and garlic and whatever, and celery and beans, right? All these natural ingredients ground up, lots of spices mixed in there to make the flavor. So they're differentiating themselves. They're saying we're not a Beyond Meat that's really making something in a petri dish. We're trying to make very good food that tastes great. It's a good meat alternative. Maybe it's not as good as meat, but it's still a great alternative. It's better for the environment, maybe better for you, and it's healthy for you because it's full of vegetables and other natural things. Then they kind of go into more of the detail, like our secret ingredients, like it's this big secret. Really, they say it's like we keep it simple. They have spices and cauliflower and different batter techniques and different things like this. So and then they talk about delivering innovative R&D and delivering delicious new products. So they have quite an expansive product lineup of lots of different products for people to try. If you find something that you like, if you're a vegan eater or a plant-based eater and you find one thing you like and then you find more products, there's a lot more under that brand domain that they're continuing to grow. This is their taco stuffer, which I have tried a couple of their products. I have to admit, I've explained in other videos, and I did like a taste test review in another video. I found the products good. Like I tried this taco stuffer and a pepperoni stick or whatever, and they were good. But I mean, I would much rather eat real meats than those. As a meat eater, I would just the natural oils in real meat and the flavor there I would find quite a bit better. But the meats were good. Like I remember eating with my wife taco stuffer, and we ate burritos, and it was tasty. We both enjoyed it. So and if you read reviews from, I did a video on this as well. I'll link that here. But I did review. I went through a number of reviews many months ago earlier on when I was looking at this company, and overwhelmingly there's extremely positive reviews for the brand, for the products, from vegan eaters that are trying them and are trying different products, trying the latest and different products that are available on the market. Very, very positive reviews for their products, and for that reason they have been, as I've mentioned, they have been really capacity constrained, and they're going to grow into that capacity here. So, okay, putting the fun back in functional, these are kind of their staple brands they show, and then they have some other, they bought this company called the Cultured Nut, so this cheese brand. Then they have a sort of a more artisanal, like higher end meat brand, maybe a little bit different. Maybe these ones they charge a little bit more for. And then they talk about continuing to fuel our growth. So we're just going to jump over this and go into more of the details here. So they have a Victoria facility, and then which is the facility that I visited, and only does about 1.4 million pounds of product per year. And then they have this Fairview facility that they make some of the things like the Cultured Nut out of, so some of those niche products out of that smaller facility. And then the Rupert facility is what's really important, and they're going to talk about this Wednesday in the earnings report. Rupert facility is Vancouver, and they're going from 1.4 million pounds of product in Victoria to about 37 million pounds of annual product. And like we said, right now they're like somewhere around like 4.6 or so million pounds of product right now, but they're scaling to 38 and a half million products is kind of their goal soon. In the next 12 to 18 months, have this Rupert facility running, both lines running. And then they're also going to have a store out of Victoria, and then also a store in Vancouver, so that's kind of cool. They're mixing these kind of front-end restaurants where they try different recipes and get people that are excited about the brand to come visit their stores. Which is a couple retail locations there. And then also this Patterson facility, which is another huge facility that could really feed the US market, that will be coming online as well. So massive expansion. You're talking like 4 or 5 million pounds of product right now, which was a huge jump. And then they're going to go to like 30 million pounds of product, 40 million pounds of product. And then beyond that with the California facility. So like massive jumps ahead if they can execute well, and if the products sell well at the market or distribute well. So a lot of execution risks ahead. I want to make that really, really clear with this company. I do think they're at an inflection point, but lots of execution risks ahead where maybe things stumble, don't go as well as they want, and then you're kind of kicking the can down the road, as an investor, waiting to see if the success really going to happen or not. Could wreak havoc on the stock or cause a lot of uncertainty if that happens. But if they can execute even decently well towards these goals, or exceptionally well, of course, but even better, then I think the stock's going to have huge results. Okay, we'll keep going here. We've got the chops to meet demand. So they talk about their e-commerce sales have an average of about $14 per pound. So it's great they are doing e-commerce because they take a much better chunk of the sales when they're selling direct to the consumer. And then wholesale, about $7 per pound. So these are in Canadian dollars. So we're going to roughly estimate this. We're going to work in US dollars in this video. So we said about $250 million market cap. So we're going to estimate maybe $5 million or $5 US per pound overall. Most of their sales to be wholesale. So we're going to estimate $5 US and $10, I guess, for e-commerce, but we'll just say $5 US, and that's a pretty conservative estimate. They probably would sell a little bit higher than that overall, but $5 US per pound is kind of our rough number we'll work with. And they're accelerating e-commerce, so they're pushing out more and more e-commerce sale, which is great because that's even higher revenue. It's basically double the revenue for them for their e-commerce, as we just saw. And a fast-growing network of retailers across Canada and the US, so lots of big chains are getting connected that will carry their products. And so they have these sort of highways in place to carry the large new capacity of products that are going to be scaled up and sent out. So they've been building out that capacity. Also partnering with a company called Copper Branch, the world's largest plant-based quick service restaurant chain, and Fresh Prep, Vancouver's premier meal kit service provider. So a couple more partnerships, restaurants and meal prep companies that they'll be partnering with as well. So another sort of wholesale system there that they're connecting with. Okay, serving up value. So talking about the total addressable market here. So the value of the plant-based market is expected to reach $74 billion in 2027. So I got to tell you, there's not going to be 74 different players. It's going to be quite a few different players, but I could see by 2027, you kind of wonder if a company like this could be worth several $billion. Could be like, $5 billion, maybe even $10 billion right now. They're $250 million. So huge upside even beyond just the next 12 to 18 months. Their revenue has been continuing to grow significantly. I mean, these numbers are kind of hard to really pull from because they're talking about, like, in 2019 they did less than $1 million in sales, and then they did 4.x increase. They did $4.6 million or so in sales last year. Well, now we're talking about 2021 and 2022. Like, these numbers really don't matter much. We're talking about what's Q3, what's Q4, because we're going from 1 million or so pounds of production to a couple million pounds of production to 40 million pounds of production. So that 40 million we're right at that inflection point where we're like, yeah, we sold 4.6 million dollars worth of product, and we sold that translates to like less than 1 million pounds of product of sales, but we're gonna go to 40 million. So we're gonna 40x that number. Huge growth ahead. And that's really what matters. So these, don't really matter that much. Okay, revenue by channel. This kind of also shows that most of the revenue here is going to be switching over to wholesale, as most of their sales are going to be wholesale. Revenue by geography as well. It's more of a mix, Canada, the US, but the US is going to become the dominant market that they sell to. This talks about some of their funding, and they've been able to raise money, and they're in a financially healthy position, even if they were to lose money as they're continuing to grow. This slide, they're talking about how they want to make our planet a better place to live. So they're really, again, targeting. I think they genuinely care about this, which I think is awesome, but also their consumers that they are targeting and the niche their audience that they're trying to capture the attention of and the purchasing dollars of would definitely care about the sustainability of the earth. So they are working towards that as well. And some of their 2021 key priorities: the commission line 1 of the Rupert facility. So they're going to do line 2 yet, and they have to obviously just expand out line 1 of the Rupert facility. Scale capacity of the VERY.V facility. So that's that cultured nut one, that smaller one, not as big a deal as this Rupert one. I'm not going to go through all of these details here, but what I really want to point out too, if we think about that number we pulled up, if they're doing about 4.6 million, so we'll just call it 4.6 million in pounds per year of production right now. That's kind of where they're at, and you multiply that by, say, $5 per pound. Again, I think that's conservative, so it'd be actually a little bit higher than that. $5 per pound in revenue. Then you're talking like 23 million or so in annualized sales, where they're at right now, and they're at like a 250 million US dollars. So if I just bring up the calculator there again, if I go like 252 million divided by where we're at like 23, it's like they're around like a 10-11 price to sales ratio, which is not actually that insane to think about. For a company like this that has been really, really speculative, it's really only like 10, 10 or 11 price to sales is really not that bad. And if you think about, let me find that other slide here. You think about how this production scales. So like if next year they're doing 37 million pounds, maybe say this is ambitious. Say later next year on an annualized basis, together, then maybe they make 30 million pounds of product here, and maybe in total between these 3 facilities. Let's just say they get to 30 and they're still scaling this, and they're still scaling out line 2, and they're still doing this. Maybe that's in the next, maybe that's like the end of 2022, they're at 30 million pounds and they're still growing that out. 30 million pounds on an annualized basis, then you're talking like 30 million times $5 a pound, $5 US, like talking $150 million in annualized sales, US dollars. And if you apply a price to sales ratio of 10, say that price to sales ratio kind of levels off at 10 and stays there, then you're talking like a $1.5 billion company. It could be by the end of next year, which, in that 12 to 18 month mark. And if it's 1.5 billion now, and right now it's like around $250 million. So I don't have to, wrong thing, close that. Close that. So if you divide that out by 0.25, $250 million, it's like so 1,500 divided by 250, it's about a 6x possibility. I would say would be possible in the next year or more for this company if they can execute well, if the products sell well at scale. So tremendous upside for this company, as I've said before in other videos. Also a lot of risk that the company, they need to actually sell their products, and people need to actually, I guess, first of all, execute and really ramp this growth up, this capacity up, and is going to be difficult, but also then selling the products and the market acceptance of the products, that they go out to all these wholesale suppliers, distributors, as they mentioned on one of their slides here. They can go out to all these distributors, but people actually have to enjoy the food, want to buy the food, care about the food, and that's the even bigger risk. And because if the execution fails, yeah, investors might get a little uneasy, but they'll continue to wait to see like what happens. If they're making the product, but then the product's just not selling well, it's gonna be really bad news for the company. But I think they have the marketing there, they have the product there. People seem to like the products in this niche. I think it's gonna sell, and I think they have a team that's going to actually execute and grow into this large capacity. So I think at the end of the day, I think there's huge upside for this little plant-based food company right now. And I really think we're at this inflection point. So to wrap up this video and summarize this all, if you're wondering what am I doing with the company right now, for a long time I was only holding maybe like 1% of my portfolio in Very Good Foods, but I am accumulating shares. I'm not going to buy a huge amount, but I might make it up to like 5, 6, 7% of my portfolio as I accumulate shares, and watch what happens here in the next few months. It's going to be really interesting to see what happens this Wednesday with the earnings and get clearer guidance, kind of see how much did they actually ramp up in this last quarter? What are they kind of at right now for production? And then what are they really expecting, thinking is going to happen in Q3, Q4, and then next year? That could really signal to the market what's happening and be very, very helpful. So stay tuned. I will be doing some coverage and my thoughts on those earnings as those come out. And if you got value out of this video, make sure you hit that subscribe button. Make sure you hit that thumbs up. Really appreciate that as well. And I will see you in my next video. Thanks so much for watching. And remember, it's in the bag. Cheers.